This is going to be my biggest project yet. 2 weeks ago, I asked all you certified Giga Chats whether I should start a series where I analyze every single graphite stock on the stock market. You guys answered extremely enthusiastically, so here that series is. We are kicking the series off with one of the bigger graphite players out there, Talga Group. But don't you worry, it is my goal to cover every single graphite stock on the stock market over time. But of course, I will give preference to the stocks with the most comments and upvotes in my comment sections. So if you want to see your favorite graphite stock analyzed soon, be sure to comment their name and ticker symbol down below. And now, with all the explaining out of the way, Talga Group. And really, this company can be best summed up as the European Nouveau Monde Graphite. That means that Talga is a battery supply chain company operating from Europe. More specifically, they are a company that want to produce battery anode materials made from graphite. I should emphasize early on that this company isn't operational yet. In fact, the company was only able to write down $19,000 of revenues during the latest quarter, while they had almost $7 million in expenses. So if you are investing in Talga, it is because of their future potential, not because of their current value. And their potential really is this: becoming one of the largest anode producers outside of China, where Talga hopes to leverage their multiple graphite deposits located in Sweden to output in excess of 100,000 tons of anode material by 2026 and especially beyond. And those graphite deposits be Bussin. Talga has access to a total of 66 million tons of graphite feedstock material at an average purity of around 18.6%. That is a lot of freaking graphite. Assuming this figure from Google is even remotely correct, there'll be enough graphite to power up to 200 million freaking electric vehicles. But of course, not all of this graphite can and will be extracted, and not even all of this graphite is economically viable. But I do still think that it is really important to note that Talga has access to an enormous graphite deposit. In fact, Talga Group's deposit contains roughly 12.2 million tons of pure graphite, while one of their competitors, Nouveau Monde Graphite, only has access to about half of this figure. Moreover, NMG's deposit clocks in at the 4% purity range, while Talga Group average in the 18% purity range. That is an insane difference. I cannot stress enough how much easier it is to purify 18% feedstock material compared to how hard it is to purify 4% feedstock material. Hence why most likely Talga Group will be able to produce graphite for a significantly lower price than NMG will be able to. Talga doesn't really give us the exact figures for what their expected operational cost per ton will be. But we do know that NMG expects to clock in around the $500 per ton of graphite concentrate. And now it's probably a really good point to explain this. For our investor intents and purposes, there are basically two types of graphite we should be focusing on. One, concentrate, which is basically the way graphite can be found in the ground, but then super pure. And two, there is anode materials. This is graphite shaped, molded and coated in a specific manner suitable for use in batteries. Pure graphite concentrate goes for roughly $2,000 per ton right now, while anode material can go for prices in the $10,000 range. So for a company, it is a huge benefit to be able to do this processing in-house. It allows you to sell the same graphite, although in a different form, for at least 4 to 5x higher prices. Hence why this form of graphite as an anode material is the main one that Talga Group seems to be focusing on. In fact, Talga Group already has multiple anode material finishes patented and ready to go. This can really add a lot of value to a graphite business. Again, it is important to note that Talga Group is currently unable to sell these anode materials at a high volume. In fact, the company is still waiting the required permitting for this enormous anode material facility, so it's still all early stages still. This is really cool, by the way. Talga Group already signed an Offtake agreement with ACC, which is a battery subsidiary owned by both Stellantis, Mercedes and Saft. It is an unbinding offtake agreement, which is basically the industry standard for these super early stage mine startups. But it is really cool to see that such a big player in the EV industry sees the potential in Talga Group and is willing to offtake such a significant chunk of Talga Group's future potential anode materials for a pretty long period as well. Although in this video I am making it seem like Talga Group will not be having any revenues until 2026, which isn't really the truth either. Talga has actually already worked towards a 25,000 ton trial mine, which is really cute because for a lot of companies a 25,000 ton output would be an enormous figure to achieve. Anyways, that trial bad boy could be generating Talga some revenues between now and 2025. But its main purpose is providing the material that can be used to get their final anode plants operational. Moreover, Talga does hope to have their 20,000 ton per annum anode facility up and running by 2024, generating revenues for Talga Group from that point forward. And those revenues would be really good from a dilution perspective, because damn, Talga Group's plants are really expensive. The company expects their enormous mine and anode plant project to cost in the neighborhood of $1.5 billion for their two projects combined. Compare that to the current measly $5 million of cash on Talga's balance sheet, and well, you'll see that the company needs at least 300 times this amount to see their grand plans become reality. And that is where the entire crux of this investment lays. How the F will Talga Group raise all that capital? I'm gonna make a guess here, because most probably even Talga Group doesn't really know the specifics of this yet, but I do think they'll raise this cash through 1, a shit ton of dilution, 2, some governmental support, and 3, a shit ton of debt, which is actually the holy mine startup trinity if you weren't aware yet. So this is how I see it. The potential certainly is there. After all, 1,000 tons of anode material from 2026 at a conservative price of say $7,000 per ton means $700 million in revenue per year for Talga Group. Apply a conservative price to sales ratio of 3 and you would get to roughly a $2.1 billion company. Let me repeat that, a $2.1 billion company. While right now the company is worth roughly $300 million. So in just a couple of short years the company could easily 7x to maybe even 10x in value. But that does not mean that your investment also 7x's or 10x's on the same time period. Whether that happens all depends on how many shares Talga Group will sell between now and 2026 to finance their plans. But neither me nor Talga Group nor anyone else actually knows this figure. And without knowing the number of shares outstanding by 2026, it is impossible to know the true value of Talga Group today. So yeah, that is where I currently stand with these enormous scale graphite projects. These large scale projects are so interesting and they could provide a tremendous return for shareholders. But on the other hand, they are also shrouded in insecurities. 1, if these plans will materialize at all. 2, with how much debt they will in fact materialize. And 3, how much you shareholders will be diluted between now and the first operations. So I personally cannot really invest in these at this moment in time. But maybe if we do get a clearer picture from Talga Group in the coming years, maybe after Talga Group finally starts generating revenues by 2024, maybe then I will finally invest in Talga Group. Now, quick plug for future Stijn. I am working on a project through which I could host one-on-one sessions with some of you guys to talk about investing, the correct long-term mindset, and building wealth. So if a service like that does interest you, do keep your eyes open for that. I do hope to launch this reasonably soon-ish. And now it is time for me to give you the classic YouTuber disclaimer. I ain't no financial advisor yet, and this video certainly isn't financial advice. And while I do not own any Talga Group shares at this moment in time, I am a shareholder of one of their competitors, Atomic. Until then, thank you so much for watching. I love you all. Peace.